Fear is gripping the markets. Stocks are in free fall, volatility is surging, and mainstream media is fueling panic. Every dip feels like a trap. Every rally fades, and investors are scrambling for answers. But history shows that the biggest opportunities emerge when fear is at its peak. Right now, the market isn't just uncertain, it's in full-blown panic mode. According to Fundstrat's Tom Lee, this isn't the start of a prolonged bear market, but a setup for a massive rally that could catch most investors off guard. Markets don't bottom when people feel good. They bottom when investors give up, and we are nearing that breaking point. This isn't just another correction, it's a shakeout before the next bull run. Lee is particularly focused on small-cap stocks, which have been hit hard in the recent sell-off but historically lead in market recoveries. With the Fed easing, macro headwinds fading, and risk appetite returning, we could be on the verge of a small-cap supercycle. Here's a breakdown of Tom Lee's market outlook, why this sell-off presents a golden buying opportunity, and 3 small-cap stocks primed for significant upside. Power Solutions International Inc., PSIX. PSIX is an under-the-radar industrial stock positioned at the heart of the growing energy demand, particularly from AI-driven data centers. While revenue has been stable, the company has significantly improved its profitability. Gross margins have surged to nearly 30%, and operating income jumped 77% year over year. AI, cloud computing, and digital infrastructure are consuming more power than ever, and Power Solutions is perfectly positioned to meet this demand with its clean fuel engines and advanced power systems. Despite already delivering a 1,300% gain over the past year, the stock is still trading 25% below its recent high, offering a strong entry point. With lower interest rates ahead and increasing energy needs from AI-driven infrastructure, Power Solutions isn't just surviving, it's thriving. This is the kind of stock that could quietly double or even triple as more investors recognize its potential. OppFi Inc. OPFI. OppFi is capitalizing on one of the biggest shifts in modern finance, the rise of digital banking and AI-driven lending. Unlike many fintechs struggling for profitability, OppFi is laser-focused on serving subprime and non-prime borrowers, a market that big banks have ignored. In 2024, OppFi delivered strong results with EPS soaring, net charge-offs improving, and free cash flow nearly doubling to $96.3 million. What makes OppFi stand out is its AI-driven credit model, which now automatically approves 79% of loans, making it highly scalable. Nearly half of Americans live paycheck to paycheck, and over 50% have bad or no credit, meaning demand for alternative lending solutions is massive. Despite strong financials, OppFi trades at a significant discount to its fintech peers. The company recently raised its 2025 guidance, projecting up to 133% revenue growth and 177% earnings growth. If its valuation catches up to industry standards, the stock could easily double from here. Credo Technology Inc., CRDO. Credo is at the heart of the AI revolution, providing the ultra-fast, high-bandwidth data transmission that AI infrastructure depends on. While AI gets the headlines, none of it works without cutting-edge connectivity solutions, an area where Credo dominates. The company is a leader in active electrical cables, which are quickly becoming the standard for AI clusters, hyperscalers, and next-generation data centers. These cables offer 100 times better reliability than traditional optical solutions, making them essential for high-performance AI infrastructure. AI workloads are exploding, with GPU clusters scaling into the hundreds of thousands, and every connection in these systems must be ultra-reliable. This demand is reflected in Credo's performance. Q3 2025 revenue surged 154% year over year, crushing expectations. In just 3 months, the company generated nearly 70% of last year's total revenue, signaling massive growth momentum. Credo's 63.7% gross margins are among the highest in the industry, demonstrating pricing power and a technological edge. One risk is its current reliance on a single hyperscaler for most of its revenue, but diversification is already underway, with 2 new hyperscaler customers added and more deals in the pipeline. As AI-driven data center expansion continues, Credo is positioned to be a long-term winner, and investors should be paying close attention. Despite market panic, history shows that the best opportunities emerge when fear is at its peak. Small-cap stocks, often the hardest hit in downturns, tend to lead the charge when sentiment shifts. Power Solutions, OppFi, and Credo each offer strong growth potential in high-demand industries. With macro conditions improving, these undervalued stocks could deliver massive upside in the months ahead.